keep it going with earnings then. And before we interact with the management of Godrej Properties, let's just take a look at what the numbers are looking like this time around. It's been a good set of numbers coming in. Their sales have dipped marginally on a year-on-year basis, but overall, they're largely in line with what the street was expecting. Collections have gone up 27%. Area sold is lower by 6%. But overall, it seems to be a good quarter for Godrej Properties. Nonetheless, the stock is rather flat right now. Let's interact with the management. Gaurav Pandey, the Managing Director and Chief Executive Officer of Godrej Properties, joins us. Gaurav, good morning. Before we talk about your Q3 earnings, give us your take on the union budget this time. It has a number of measures for the real estate space, both directly and indirectly. Do you believe more disposable income in the hands of people could boost real estate demand?
Everybody has a wish list of what a budget can deliver. But I think to be very fair, this budget kind of strikes a great balance on both short term and long term. I think from a real estate perspective, apart from, of course, some of the initiatives the government is taking, the real way to look at from a long-term growth is how the economic growth model is going to hold true, which is essentially ensuring that infrastructure spends continue to be good, because finally real estate depends upon the quality of urban development that we get to see, and also income growth of people in the country. Because if you have economic growth and stability, is when job creation happens, is when job stability happens, is when people get to see increments in their jobs. And that's how home buying decision kind of starts. So what's very encouraging is one of the sort of a radical moves if I were to say, is on the direct tax part for individuals. The change in taxation from a entry level point of view, I think this is going to be a huge boost for consumption demand. And that itself will be very critical from a domino effect to other sectors as well. And real estate would be not a direct beneficiary, but a sort of an indirect beneficiary to that. And like I mentioned, the capex spending are extremely encouraging trends, because this kind of stimulates not directly only to real estate because of the kind of initiatives government is taking, but also for industries like steel, cement, and the overall, sort of correlation of other sectors to infrastructure sector. So pleasantly surprised. Of course, everybody has a wish list that budget can do X, Y, Z, but I think this is a very, very well balanced budget. And especially on the fiscal side, the prudence that the government is doing, this is very encouraging from a long term.
Gaurav, this is Shrishti also joining in. But we wanted to understand about the real estate cycle, which is typically like 7 years long. And what we understand from our conversations with other developers, that we are already in the 5th year of this cycle. Now, do you expect to see, or are you already witnessing some slowdown in the demand in the real estate markets across the country? Give us some sense there.
I would say, depending on what's the starting point, we would see post-COVID, because still COVID was going on, the sector was not really in a cycle per se. So this is between 3rd or 4th year, if I were to put it this way. But I feel the sector is doing reasonably well. Is it going to be a long-term cycle from my perspective? My best guess is yes, it is a 7 to 8 year sort of a cycle. And across the cycle, different cities are operating at different stages of the cycle. For us, it's been extremely exciting. Yes, there is bit of a chatter that you get to see and read in newspapers. But if you just go by some numbers and logic, real estate is pretty phenomenal. In fact, if you just see Godrej Properties, last calendar year, we did about 28,800 crores worth of sale, which is one of the highest growth percentages that we've seen. It's like a 69% kind of a growth. And this is after a very high base effect of even the previous year. So yes, the sector is doing reasonably well, but the stages of the cycle will, of course, mature as we move forward. Certain cities are yet to take off, like Pune, for example, hasn't really taken off from a price growth as much as, say, Gurgaon would. So there will be a different level of maturity of different markets. But yes, sector overall is doing fantastic.
Okay, thanks for that outlook coming in. Let's now talk about your Q3 numbers in detail. Now let's do a deep dive on your sales, because they have seen a 5% drop on a year-on-year basis. This is largely despite Q3 being a festive quarter. Could you help us understand what are the reasons behind this and what is causing this slight pressure that we are seeing on the pre-sales front?
I think we had quite a strong quarter. We did about 5,400 crores worth of sales. There is from a quarter point of view of YoY, yes, there is a marginal decline emanating largely of 2 launches slipping out of Q3 and moving to Q4, which is kind of a good thing from a Q4 point of view, because we've got a head start. So we had something planned up in Sector 44 of Noida, which moved from December launch to now. And we had planned an entry strategy, Big Bang to Hyderabad, which again is happening as we speak in the market. So, but that aside, I think pretty fantastic quarter 3. And from a sales perspective, in fact, if you look at a 9 months sort of a number, we were like close to 19,200 plus crores worth of booking value, the largest by any residential developer in India. And our sales grew by like close to 48% on Y terms. So, yeah, but it's mostly a slippage of launch to Q4.
You are comfortably on the path to achieve the sales guidance of 27,000 crore by the end of FY25. What does the guidance for FY26 look like?
I think a little ahead of its curve to really comment on next year. Typically, we tend to think about guidance once we wrap up the year basis the launch calendar for how it looks for a typical next year. But yeah, I mean, fair to say that do we see good opportunity sets for Godrej Properties in the markets that we are kind of present? The answer is of course a dominant yes that we will do well. I think it will be a little premature for me to comment on FY26 per se. But yeah, you're right that with 71% of guidance of FY25 already met and very high likelihood we'll cross the guidance. We will end the year at a fantastic note and hopefully we'll see good growth in the coming years as well.
Okay, Mr. Pandey, on that note, we'll let you go. Thank you so much for taking the time out and speaking to us at ET Now this morning.